Hello, and welcome to another update video about Polygon. Yeah, this is the larger time frame chart, and I just want to remind you again that the market has reacted here to long-term support in November, and we've seen a bounce, but the bounce was not clearly impulsive. The best way to count this move to the upside is as a three-wave move, and while that could eventually take the price higher, in the white scenario, this would only work if the next move up here continues as an ABC structure in wave 3 as part of a larger ending diagonal that started in the November low area. So an ending diagonal is needed here because the first wave up is only an ABC structure. So it didn't form 5 waves. That is generally problematic. The chart could have formed an internal 4th wave and an internal 5th wave for a 5-wave move up. It just didn't. It just wasn't able to do it. Okay, and this obviously makes the bullish outlook a little bit questionable. At least probabilities are fairly balanced, and we could still follow a bullish thesis. We can still follow a bullish scenario, but it would require obviously the reaction to a certain support area that we're actually tracking on the smaller time frame. So now, please note that until we get really another solid reaction to support, we also have to consider we cannot ignore the risk for one more low in a wider wave 4 correction. At the moment, the idea would be that in November, the wave 4 bottomed. The problem is, if we now break down, well, is Polygon going to form a new high and even all-time high before Bitcoin forms a major top? It is at least questionable. Now let's go to the smaller time frame chart. Here you can actually see the 3-wave move to the upside that formed in wave 1 and the wave 2 pullback, which again is also a 3-wave move, which is the main reason why I'm still tracking an overall move to the upside, because yes, we have 3 waves up, but also 3 waves down. So it's quite neutral. The context definitely allows for a bullish interpretation. If, however, or had we seen 5 waves down, well, that would be clearly bearish. 3 waves up and 5 waves down, but we haven't seen that. Now, however, the price was also not able to break out really impulsively here from the recent lows in December. So the main support area to uphold a bullish scenario is the 35.3 to 41.7 cent area. That is key support for a larger wave 2. I mean, that larger wave 2 could even get another low. It wouldn't be ideal, but possible. For now, if we follow the idea that a wave 2 bottomed on the 20th of December after this ABC pullback occurred, then it's really important now that obviously the 20th of December low holds anyway. I mean, that's obvious. That's the invalidation point here at 41.1 cents. I mean, that's black and white invalidation. There's no gray area there. However, we have an upper support area between 43 cents and 44.9 cents. A break below this micro support area would strongly suggest that there will be invalidation. And the orange alternative scenario will come into play. It's highly likely anyway. For now, though, we can still track this as a potential 1-2 setup locally. Not high confidence. I'm simply watching for a reaction in this support area. I'm not necessarily anticipating one, but this is an area where the bulls should turn up if really a 3rd wave to the upside is going to start, and it should do it from here then anyway. So it's like a key area now. If the price forms another low, then it will be very likely that we'll get the invalidation of the wider bullish pattern here. And, the price would then have to restart that rally to the upside. And this 1-2 setup, which originated possibly here from the 20th of December low, would need to restart basically. There is unfortunately no clear micro count. I could definitely make the case for one more low. Looks like a 3-wave move down so far. Could easily get one more low in wave C of 2, but that is unreliable micro counting. So we could say maybe we had a 1, 2, 3 wave 4. Maybe it forms one more low. But again, if we get a sustained break, if we get a sustained break below support, the invalidation point is there, So it depends on the bull's ability to hold above the 20th of December low. Now, to summarize, there is a short-term bullish and a short-term bearish scenario. The short-term bearish count allows for a deeper pullback into the lower support range with support at 35.3 cents. That would be confirmed with a break below the 20th of December low at around 41.1 cents and would become more likely with a break below 43.1 cents. And any reversal from here to the upside would require, minimally a break above this wave 1 high from the 21st of December at 52 cents to really strongly suggest that the third wave to the upside has started in the white scenario, and the white count is short-term bullish, but invalidation point is the 20th of December low, and the orange count would also be bullish, but obviously less bullish, and the bulls would need to prove would prove themselves again. So yeah, that's at the moment what I'm tracking. So unfortunately not too much action going on at the moment. We have to be patient. So I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.